You know what's wrong with most momentum indicators? They only show you current momentum, not where institutional momentum is building. By the time you see the momentum signal, smart money has already positioned for the next move, which means you're late to the party. And that's exactly why you need to see this indicator that's almost always right about momentum shifts. This tool doesn't just show you momentum direction, it also reveals exactly when momentum exhaustion will trigger reversals. And the best part is, it shows you their actual momentum accumulation and distribution patterns in real time. Now, to add this powerful indicator to your chart, head over to TradingView and pull up any market you want. I'm using the 15-minute time frame on the euro-dollar, but this works on any chart, any time frame. Click on indicators and type in commodity trend reactor. Make sure you select the one by Big Beluga. Now, this isn't just another CCI indicator that most traders are familiar with. This is the first momentum tool that solves the biggest problem plaguing every indicator on the platform: lag. Here's what makes this indicator very accurate about market direction. You've got the enhanced CCI foundation, which, unlike traditional CCI, adds intelligent trailing logic that locks in trend direction automatically. So, instead of oscillating wildly like regular CCI, this tool provides stable, reliable signals. Also, you'll see the CCI line moving between threshold levels at 50 and -50. So, when it's above 50, it signals the market is in confirmed bullish momentum. But when it's below -50, it means the market is in confirmed bearish momentum. On your price chart, you get a dynamic trailing stop that changes color. Green line below price during uptrends, and orange line above price during downtrends. And the best part is, this line only changes direction when momentum truly shifts, filtering out all the noise. Now, to eliminate false signals and get maximum accuracy, let's get your settings right. Double-click on the indicator to access the settings panel. You'll see the CCI length setting at the top, which is critical for the indicator's accuracy. Change the CCI length from the default 25 to 200, because this eliminates short-term noise and only focus on genuine momentum shifts that matter. Next, keep the trail line length at 20, a perfect balance for the trailing stop mechanism. Any lower and you'll get false direction changes. Any higher and you'll lose responsiveness. Then set upper threshold to 50 and lower threshold to -50. These levels are perfect for trend identification across all markets. For the trailing stop colors, I recommend bright green for bullish trends and bright orange for bearish trends, as this creates instant visual clarity. Next, enable the mark extremes option, as this plots colored squares when CCI reaches plus or minus 200 levels, warning you of potential momentum exhaustion zones. Once that's done, click OK. Most traders struggle because they rely on random signals without a clear system. That's why we focus on structured strategies and automation, so you can study how these tools work step by step, without guesswork or emotions. If you want to learn more and see exactly how these strategies are applied in real market conditions, click the first link in the description. Now, let me show you 3 ways to trade this enhanced momentum system. Strategy 1 is basic trend following momentum. First, you want to wait for those clear directional signals. CCI above 50 with green trailing line for longs and below -50 with orange line for shorts. But don't forget to check the trailing line color. You want momentum and trend structure alignment for maximum accuracy. Now, if CCI shows momentum but the trailing line disagrees, skip the trade. But when everything lines up, that's your entry. Place your stop loss at the trailing line and set the take profit at 1.5 times the risk. These momentum trades never fail when both signals agree. Strategy 2, exhaustion reversals, is where this indicator truly shines. First, you want to add RSI confirmation to validate the reversal setup. Then wait for those extreme plus or minus 200 levels. When CCI hits plus 200 and RSI shows bearish divergence, that is, price making higher highs while RSI makes lower highs, that's your high probability reversal setup. Look for the colored square markers that appear both on the oscillator and on the price chart, as these mark potential reversal zones with mathematical precision. The background color will also shift, giving you clean visual confirmation of the momentum change. Set your stop loss beyond the extreme level and target 2 times risk, because exhaustion reversals often create violent moves. For bearish reversals, wait for CCI to drop below -200 with bullish divergence on RSI. Then enter long positions when the momentum shifts. Strategy 3, multi-time frame momentum. Confluence is my favorite. When CCI momentum aligns across multiple time frames, the accuracy becomes incredible. First, wait for your momentum signal on the main time frame, that is, CCI crossing above 50 with green trailing line. Then check higher time frames for momentum agreement. You want the 1 hour, 4 hour, and daily charts all showing the same momentum direction with their respective CCI readings. Look for all trailing stops to be the same color across time frames, as this indicates institutional momentum alignment. Now, when all these conditions are met, you've got a very accurate right setup. Enter with larger position sizes due to the multi-time frame confirmation, and target extended moves, as this indicates sustained institutional momentum. The power of this 3-strategy approach is how it covers every market condition. By combining CCI enhancement with trailing logic and extreme level detection, you get a complete momentum framework that works in any market environment. Before I show you the next strategy, remember this: learning indicators is one thing, but applying them within a structured process is what really matters. That's exactly why we've created a place where you can review these strategies, see live examples, and study them in real market conditions. Just click the first link in the description whenever you're ready to explore further. Now, different markets require different settings for maximum momentum accuracy. For forex pairs, especially majors, you want to set CCI length to 250 and keep thresholds at plus or minus 50. This filters out the noise from central bank interventions and catches real institutional momentum shifts. Focus on momentum signals during London and New York sessions when institutional flow is most predictable. For gold, you want to drop your CCI length to 150 and use thresholds of plus or minus 75. Gold exhibits the most violent momentum shifts, but also has long periods of sideways grinding. Also enable the extreme markers at plus or minus 250 levels for gold, as it frequently reaches these statistical extremes before major reversals. For crypto, this is where it gets interesting. You'll want CCI length at just 120 and thresholds at plus or minus 60. Crypto momentum never sleeps, so you need faster settings to catch whale movements early. Plus, higher threshold levels because crypto's natural volatility creates stronger baseline momentum readings than traditional markets. For stocks, set CCI length to 180 and keep thresholds at plus or minus 45. Individual stocks trend more consistently than other markets, so you can use slightly lower thresholds for earlier entries. For futures, use CCI length 200 with thresholds at plus or minus 55. Futures have natural momentum cycles tied to contract rollovers and seasonal patterns. Thanks for watching, and I'll see you in the next one.